All right, let's dive right in. We need to talk about our obsession with passive income. What if it's actually the thing that's holding you back? What if the real, honest-to-goodness, fastest path to wealth is something, well, a lot more active? Let's get into it.
This quote just hits the nail on the head, doesn't it? Seriously, think about it. All those hours people spend trying to get this tiny little trickle of passive income. What if you took that exact same time, that same energy, and just focused it on your active work? You could generate a flood of cash. It's a trade-off so many people make without even thinking, but is it the right one?
Yeah, it's a bad trade, but honestly, it's way worse than that. It's a fundamental miscalculation of your most important assets, your time and your energy. This is a trap that snares countless entrepreneurs, and today, we're going to show you exactly how to step right over it.
And that brings us to our first big idea here. This whole chase for passive income can be a massive trap, especially when you're in the early stages. It sounds amazing, right? But more often than not, it's just a distraction from the real engine of wealth building.
And here is a secret that's just hiding in plain sight. You know all those gurus selling you the dream of passive income? Guess how they got rich? From massive, active income, usually by, you guessed it, selling you the dream. They built an incredibly powerful engine first, and only then, way later, did they start siphoning off the profits into those passive streams.
So let's actually look at the math, because this is where the whole picture just flips upside down. We're going to compare two totally different kinds of returns, and believe me, the difference is, well, it's staggering. First up, we've got the stock market. Hey, it's reliable, it's a great tool for the long haul, and on average, it gives you about a 10% return per year. We all know this number. It's kind of the gold standard for a good investment.
But then, there's your own business. And here, the potential return isn't a nice, safe 10%. We are talking about 100%, 500%, or yeah, as you see here, even a 1,000% return in a single year. That's a 10x. These two aren't even playing the same sport. And just to be super clear, that is not a typo. Now, of course, it's not a guarantee, but the potential for that kind of explosive growth in a business that you control is on a completely different planet than passively investing in the market.
Okay, to make this feel less like abstract percentages and more like a real thing, let's tell a little story. Let's imagine you own a fishing company, and you just had a great year. You've got $100,000 in profit to invest. So, you're at a crossroads. You've got two choices. Option one, you take the profit, you pay your taxes on it, which leaves you with about 60 grand, and you pot that into the stock market. Or, option two, you use that full pre-tax 100 grand to reinvest right back into the company by buying a brand new income-producing asset, like a shiny new fishing boat.
Now, let's fast forward 1 year and see what happened. That market investment, it did pretty well. It earned you a respectable $6,000. That new boat, though, it brought in $40,000 in new profit. But here's the real kicker, the absolute game changer. That extra profit makes your whole business worth more. A common valuation is a multiple of profit, right? Let's say 3x. Well, that boat just added $120,000 to the total value of your company.
Just look at the numbers. They really do speak for themselves. This isn't just a slightly better return. It's a completely different reality. You've got 6 grand in one hand, or you've got 40 grand plus a way more valuable company in the other. The choice becomes pretty darn obvious. Okay, so how do we actually put this into practice? It really starts with a whole new way of thinking. Let's call it the active investor mindset. It's a framework for making much smarter decisions with your money. And it really boils down to these 4 steps. First, you put your money back into the place where you have the most control, and that's your own business. Second, you focus on stacking that active income, building your war chest. Third, and this is a big one, don't get distracted by diversification too early. Wait till you've built something substantial. And finally, you let that massive active income engine you've built fund your passive stuff way down the road, after you've already won the big game. So what does reinvesting actually look like? Well, it means buying new equipment that makes you money right away, just like that fishing boat. It means hiring better people to expand what you can do. It means pouring more money into marketing to get more customers. The point is, you are investing in growth, not in equities.
And why does this work so much better? It all comes down to a single word, control. Think about it. When you invest in the S&P 500, you are just a passenger on a very large ship. But when you invest in your own business, you're the pilot. You know the engine, you make the decisions, and you get to keep 100% of the upside you create.
So this all leads us to a really powerful, honestly game-changing conclusion.
It's a complete reframing of where the real value is in your entire financial world.
I want you to let this one really sink in. Your business isn't just your job. It is your single most important financial asset, period. It's the engine that creates all your wealth. Everything else, stocks, real estate, whatever, that's just the hedge. That's the insurance policy you buy later, just in case that powerful engine of yours ever starts to sputter.
So I'll just leave you with this final thought. To turn $100,000 into $1 million in the stock market, well, you're probably looking at decades. But in your own business, where you control the strategy, you control the investment, you control the outcome, how fast could you make that happen? The answer to that question just might change your entire financial future.